All right, welcome to the Boss and the Brewer crowdfunding extravaganza. That's what we can call this one. Just letting Hendo in now. 7:30 on the dot. He's keen. He's keen for this episode. I get the feeling.
What?
How are you, mate?
I'm all right. What's going on?
You're very keen for this episode. I know you've done a lot of preparation. You've been talking to me all week. You're not drinking beer. No field trips.
No, I've got beer. I found beer. I just didn't think I had any beer. So
okay.
No, I'm pretty keen on this one because we've got some really good guests tonight.
We do.
Would you like me to double record?
You can do the double record. Do I need to let you do that, or you can just do that?
Yeah, you need
now?
to click on me and then go allow local recording.
Yeah, I'll do a little Facebooky as well. Hey.
Yeah.
I don't do that again.
Do what?
It gives me an error when I stream to Facebook, but it works the second time, I think, because I tested it just before.
Okay.
BatB 40.
BATB 40.
Crowdfunding extravaganza. What do you reckon?
Yeah. Crowdfunding extravaganza. I love it.
Like that?
Fuck yeah. And I'll bring up the chat on the other window and I should be able to see all of the thingamajigos.
All right, so we'll go share to a group and we'll pick the right one with a bit of luck. And we'll go live. I've got the guys here, so you ready to send it?
Yeah, man, send it.
All right, let's do one at a time.
We'll let
Sean in first.
All right, are we thing? Let me show the thing. View stream on Facebook. Oh yeah. Hey Sean, what's going on, mate?
Hey, good guys, how you doing?
Awesome.
Now there's a backdrop for you. That's better than my photos of my dog.
I wish I could say it's mine.
What have you got there?
I'm at a mate's place. I'm down in Ballina. I was brewing a couple of pilot batches at 7 Mile today. So I'm at a mate's place and I don't know how to work those.
Good.
You could make it up for sure.
I could. It'd be terrible.
Yeah. Just say one of them's a Stratocaster.
Oh no, this one's a P bass and that one's a jazz bass.
Okay, there you go.
I do know that much.
All right.
Yeah.
Don't listen to me then. All right, I'm going to let Matt from Birchal in now as well, and then we'll be ready to go.
Okay. Cool. I can see the chat on the other side. So if you are watching the live stream, just type a comment and just let me know that you can see what it is doing.
Yeah.
Or not. I don't care.
There's Matt. How are you, mate?
G'day. I'm good.
Hey, Matt. How are you?
I'm excellent.
Wow, you've got all that office to yourself.
Yeah, I know. So
that's
good.
my cubicle. That's my cubicle. That's my cubicle.
You look like you've got the post-COVID haircut going on. You look like you just about to go to Splendor in the Grass or something.
Yeah, I know. I'm just kind of letting it all hang out at the moment, and I'm a bit sniffly. Not COVID, but I got whatever else is going around at the moment. So.
Where are you based, mate? And who's the unlucky staff member that gets the fucking concrete pylon in their desk?
Actually, funnily enough, I'm at our brand new office, so I'll take some advice on decorating. It's very much welcome because it's brand spanking. So,
my first move would be to put a bass guitar on the wall.
A bass guitar. Okay.
They're a good look. Yeah.
That dead set where the concrete pylon is, that's the fucking naughty corner there, I reckon.
Yeah, I think so. We're going to put the product team, all the software engineers over here. So they want to be as far away from the campaign managers as possible. So.
Awesome. Well,
where are the new offices?
Just around the corner from where we've been, in Cremorne, just near Richmond, in Melbourne. Yeah, Cremorne, Melbourne, not to be confused with Cremorne, New South Wales. That's happening.
So that's what all that crowdfunding dollars get you, some fancy offices.
That's right. Actually, they're going cheap at the moment, mate. So, no one's going to offices at the moment. So, yeah, we're pretty popular with the real estate agents.
That's excellent.
Awesome.
Now, I'm just double checking the chat here. So if you're watching us live on Facebook, on our Facebook group.
It says no chats yet, if mine is up to date.
That's okay.
I've got a beer. Does anyone else have a beer or is it just me?
I've got a beer.
Oh, nice. Oh, there you go.
Cali Cream.
What are you working with? Is that a sponsored beer or did you have to pay for that?
Oh, I had to pay for it. There was some leftover malt and they said you can either reimburse us for that or you can just buy some beer. I'm like, well, I'll buy some beer. That way you get the money and I get beer and malt. So good.
Okay, well then it's not it's
Not
not
a
a
sponsored
sponsored.
beer, mate. It's not a sponsored.
We have people on. We've got Gordon. He says it's just us four and him, maybe
That's
three
okay.
others watching. So that's good. What do you got, Dan?
I thought in the spirit of the crowdfunding special, I'd crack the Brewdog
Ooh, there we go.
Overworks.
Overworks.
Nice.
Oh, I listened to the rest of that podcast.
Yeah, we can talk about that at the end. I put it on the topics if we get. I mean, you've got about 600
There are
questions.
a fucking shit. No, it's a multiple of 12.
Schooner, is it a multiple of 12?
Schooner. Fuck off with that schooner shit.
How's the 7 month? We will get to the questions quickly. Sorry, Matt. You're sitting in there.
We
in
just
empty
need to
office
drink a
wondering what's
beer.
going
Have
on.
you got a beer, Matt?
No, I don't. I came unprepared, but I actually just finished up. You'd be pleased to hear Beechworth Pale Ale at the
nice.
Cherry Tree
Oh,
Hotel,
such a good
which
beer.
is Cherry Tree Hotel is a stone's throw from here, and it's a great craft beer pub. So it's our local.
Yeah.
So,
Nice.
Well, I don't need a glass tonight for my beer because I've got a fucking silver bullet. Resch's Pilsner.
Nice. Where'd you get that from?
Adam Shell, not that one, the other one.
The other one. Nice.
There's no glass required because it's in one already. Cheers, everybody.
Cheers.
Cheers.
I might there's already a lot of questions on the thing.
Oh my
so
God, it's just
so
banana
me and
reminds
Hendo
me.
just sort of chucked all the questions together. There's a shitload of them.
There
Yeah,
are
imagine.
heaps. Heaps for both of you. Mostly lots, like almost double the number for Matt than there is for Sean.
This dog
But
is
there's
licking me.
heaps.
Stop licking me.
At least it's not humping you. Oh, are you spraying it with the
I
spray?
spray the shit out of him with the acid.
Is it vinegar?
It's just water.
Put vinegar in it.
What is that? Okay, I will.
No, I'm not saying put vinegar in it. Don't use your dog.
Lemon juice.
Put paracetic in it.
The whole house is.
What, did I
yeah.
say that or think that?
So how are we going to do this, Hendo? Because we've broken the questions up by guess, but
Yeah. Well, we got what I think we might do is we might just roll through some questions for Matt, and then we'll head over to have a chat to Sean, and then we'll come back to Matt. But I think probably a good thing to do would be just to get each of our guests to introduce themselves and just bit of a brief 30-second synopsis of who you are, what you do, and what's going on. Let's start with you, Sean.
Yeah, so I'm Sean, a brewer and managing director of Future Magic. So we're going through crowdfund, early stages, which I'm sure is what all the questions are about. And yeah, I've been brewing for a little while. I've done a little bit of consulting. I think 2 little consults with you, Hendo. One which you gave me the almost now infamous Gypsy Brewing chat. That I think
I have the chat where I basically rip the rose-colored glasses
100%,
off people who are aspirational in opening a brewery. To lots of people, even Dan
yes,
back in the day.
yeah.
And
He tells everyone not to do it, and then everyone does it.
and everyone does it anyway.
Realize why he said not to do it.
no one listens to me.
Yeah.
No, my point of view of that is like is it comes from a good place. It's a very straight
100%,
upfront.
yeah.
You know, if that the industry is tough, and if you're prepared to tough it out, give it a red hot go.
Yeah.
So yeah.
Yep.
Anyway, sorry.
That's
Continue.
me.
All right.
How about you, Matt?
Matt Vitale, so co-founder and MD of Birchal. So we're an equity crowdfunding platform. We've hosted quite a few offers for craft breweries over the last few years, quite a few in the last financial year. Released our funded report. So happy to kind of answer a few questions about that. A really strong return, I suppose, of craft brewing to crowdfunding, which is great, and also delighted to be hosting the Future Magic offer in a few weeks' time. So.
Hey, what was it like? Was it like, you know, because you're like a crowdfunding platform.
Yep.
And then you crowdfunded yourself on your own crowdfunding platform. So that's like crowdfunding inception. What was that like?
Crowdception. You've gone off script already, Hendo. You got questions that aren't even bloody questions.
Oh, but just because I was curious.
Inception, Meta. We were like, lowercase Meta, not, uppercase Meta. Meta before Meta. But yeah, no, it was a really terrifying but super exciting experience. I think I think we're already empathetic as a business to what founders are going through. It's a really intense process. But certainly, reinforced a lot of the advice that we've been giving companies. We obviously learned a lot from, all of the offers that we've hosted and seeing what worked, and, incorporated a few of those learnings into our own strategy for our raise as well. But it actually required like a lot of planning. So, early engagement with, so ASIC is our regulator. They supervise us. We've got a financial services license. So, we, needed to engage with them really early and tell them, what we were doing. And, as you would imagine, presented a few issues with conflicts and things like that, which,
yeah, that's what I was going to say, because like, I'm sure there would have been some issues around conflicts of interest. And I was just wondering if you sat down with ASIC and said, well, we're gonna crowdfund ourselves on our own crowdfunding platform, and ASIC says that's not legal, and you go full Star Wars Emperor Palpatine and go, I will make it legal.
Yeah, I mean, it wasn't technically illegal, but you're absolutely right. It was the conflicts. It's more this kind of, subjective assessment of, are you doing the right thing as a licensee in managing, your duty to manage conflicts appropriately. And yeah, look, it wasn't a situation where they kind of read about it in the paper or saw it on social media and they're like, oh, that's interesting. Like we, spent a lot of time talking to them beforehand, and we had some protocols in place, aided by, external law firm that were observing us. We've kind of split the teams, Chinese walls, all sorts of things. But partly the reason why it was important for us to close the offer pretty quickly, like hit our maximum target pretty quickly. We think hitting a maximum target should be the objective of any campaign. It's what people should work towards. But it was going to be difficult for companies that were raising on a platform as well. Like we didn't want to, disrupt or disturb what they were trying to do, but we needed to raise at some point. So, we kind of engaged with companies that we felt that, might be impacted by this very early. So let them in on what we were planning, and, but made sure that, look, we wanted it to close early. We knew that we had surplus demand for what we were prepared to raise, but it closed in about an hour, which even we were surprised by. But it was good. It was exactly what we wanted to do. Just, get it done and then just get back to serving our clients, which is the most important thing.
So to take a step back from there, what does Birchal do, and what's the process of crowdsourced funding?
It's pretty simple. We host offers under the crowdsourced funding regime, which is a relatively new development in Australia. 2017, the legislation was passed. 2018, the first intermediaries were licensed. But basically, we help companies raise capital online by making a regulated offer of securities open to retail investors. And traditionally, this has been, a really expensive, complicated, time-consuming thing that only public companies really have been able to achieve. But we try to make it as simple and as efficient as possible for companies to just get out there, tell their story, find their passionate supporters and raise capital from them. Part of what we were raising capital for was, really to build out a range of products and services to serve companies and investors, because we see this as a new asset class, that, the primary capital piece, people raising money for new issues of shares, we feel we've got a pretty compelling solution for that, and it's working and the industry's growing. But as these companies mature, investors will want to start exiting their investments at a sensible time. It's going to become more and more important for companies to communicate with their stakeholders and keep them updated on their progress and things like that. And then as the activity increases, just having really effective and sensible infrastructure just to tie everything together. So that was a big part of our raise is, everyone's excited with what we've been able to achieve, but it's the what's next that I think is really exciting. And we see ourselves more as, an infrastructure business for this new and exciting asset class.
Yeah, I mean, so you're basically a platform for companies to basically raise capital, through just people who are interested in those companies, and it's basically direct to retail instead of being open to sophisticated investors and whatever they call them and that sort of thing. Yeah.
Yep. I mean, look, there's a lot of wholesale investors that that participate, as Dan would know. So the unique feature of what we do is it's open to retail investors. But it's a common misconception that this is just kind of small time investors that are not that sophisticated and not really kind of scrutinizing these opportunities. And that's not consistent with our experience and what we've observed on the platform. Close to half of the money that's invested comes from these professional type investors. Anyone that wants to invest more than $10,000 will need to establish their status as a wholesale client. And I'd say almost every offer has at least some wholesale component to it. So, and often companies will find these people to, people that are investing larger amounts, that they're going to be more price sensitive than people that are spending a few $100s. So they perform a really valuable role in helping companies to set the price for an offer before they launch, because they're the ones.
Are you talking like banks or superannuation funds or
high net worth investors, venture capital funds, all of the above? No banks or super funds. Self-managed, plenty of self-managed
super funds, of course. Yes.
But no banks have invested through the platform yet, but mainly high net worth investors, a lot of family offices as well. The largest single investment we've facilitated through the platform was $1 million from a new family office that was being set up in response to a Facebook ad, and they expressed interest at $10,000. It was pretty early in the piece, but it was, it showed us that it works.
Can you tell us? I suppose you can't tell us what campaign that was. I'm guessing.
It was no, I think I'm going to leave that one alone.
Stop asking the controversial questions, Dan.
I shouldn't have said it that way. If I had just asked what the campaign was.
Yeah, I know. I might have got it.
But I can attest to that. In our campaign, we had an investment from a guy who's a really switched on guy, works in a really important job, has really good skills that have been already useful to me. I'd never met him before. He invested $100,000. He rang me a couple of weeks later and said, "Oh, I invested in your crowdfunding campaign. Can I come down and check the place out?" And that I'd never had any contact with him before the raise.
Amazing.
Yeah, right. Is that something that you found, Dan, happened a fair bit with people coming in and especially high net worth adding value as well as putting in capital?
Not particularly, no.
Okay.
I think I did with the traditional investors, not so much with the crowdfunding, but we already had a lot of investors before we did crowdfunding. Like we had 50 investors. We kind of had an advisory board. We've got a senior management team. We're pretty established when we did it. But in this one case, this guy was a CFO of a big medical kind of practices place, and had finances. If you can get someone with finance knowledge to help you out, you always take it. And that was just one example.
Yeah.
Yeah, awesome. Yeah. So, Matt, how does Birchal make money?
We charge some upfront fees. So our process has two phases. We run an expression of interest campaign. So that's where the company's out there and just trying to build interest for their offer. And then the offer itself. So there are two campaigns that run in quick succession, each about 2 to 3 weeks. So to publish an expression of interest campaign is $900. And then when we get to the offer stage, that requires us to review the offer document and approve of publication, and then publish it and run the application facility. It's $1,900 to do that. So about $2,800 of upfront costs. And then only if the offer is successful, it's 6% of the total approved investment.
Okay. That sounds pretty reasonable to me. And what do you find when not just across the liquor industry and that sort of thing, and the crowdfunds you've done around that? What's the typical individual investment made by someone on the platform, or the median, I suppose, or the most common?
Yeah. Look, I mean, the average is, I think it's around $1,600 at the moment. But as we mentioned, there's quite a few of those that are, wholesale investors that are investing, above 10,000, and so that kind of skews it a little bit. The most popular minimum parcel size, so the minimum investment that an investor can make is $250. But we find every campaign has, a good spread of different kinds of investors, but they do vary. So one campaign that we've hosted raised, $800,000 from, I think, about 80 investors, is one of the case studies in our recent funded report. So yeah, it can vary. It just really depends on the opportunity, the audience.
Yeah, that makes sense. And
I think the median number would tell you more than the average, wouldn't it? The average wouldn't be a very useful number, because you got someone investing $100,000 and then 500 people investing $200, and the median's going to be 200 and a bit.
Yep.
What about the mode?
The mode. Isn't the mode the same as the average?
Can I take these questions on notice?
No, mean, median, and mode, they're different things.
The average, isn't it? What's the mode?
The most commonly occurring.
Yeah, that's right. That was the question.
The mode. So is the mode generally the minimum number?
Yeah, it might be. You give me a few minutes, I can probably bash these numbers out if you.
If you think these questions are hard, you see what good cop, bad cop has here lined up for the end of the episode.
He calls me bad cop. Have you guys had a chat about, or have you listened to past episodes and that sort of thing?
I've seen a couple of these.
Yeah. Absolutely.
Please, not the field trip episode. Please don't say you listen to that one.
I have to take that one down.
Yeah. My view on equity crowdfunding is that I think it's a great thing, and I've run a brewing company before. It went broke. It was fucked.
Yep.
That's why I'm such a realist when I speak to lots of people who want to start a brewery and that sort of thing. And it's not I'm not anti crowdfunding, because it's so hard for a craft brewery to raise funds through traditional means like a bank.
Yep.
I've been pretty consistent on this. It's just not my cup of tea.
Yep.
That's it. And it's a financial decision. That's I'm comfortable with that one. So when you when someone comes to you and say, hey, I want to do an equity crowdfunding, and they pay their $900 up front and that sort of thing to sort of start off that process, Matt, is there any due diligence that you do on the business
when they come to us?
Yeah, when they say, hey, we want to do an equity crowdfunding, is there any due diligence that you're required to do? Or
Yeah. I mean, there's quite a lot, and it happens in phases. So maybe if I kind of step back and describe what the old world was like, traditionally with raising capital for small business before crowdfunding, it's really hard, right? Like you couldn't tell anyone about your opportunity. So you can really only touch access the networks that you have a direct connection with. And if you don't have connections, then usually you'd go to a corporate advisor or someone that had access to, distribution, or a bunch of investors that might be looking at these opportunities. And what would happen is, these advisors would, start kind of asking you questions about your opportunity, and then usually charge you some upfront fees to prepare, documentation and kind of get everything ready, and then start, shopping it around to these investors. Now, at this point, the company's usually out of pocket to the tune of tens of thousands of dollars, often paying a retainer to these advisors, and then only to find out in many, many cases, no one's interested. And this was something that was, quite prevalent in the industry before crowdfunding came in. And I suppose we weren't aware of the extent of it until we launched, and we started hearing the experiences of founders that had been raising capital previously, just pounding the pavement and, not able to, achieve an outcome themselves. So getting advisors to help them, but then also not achieving great outcomes.
And it costing a lot of money as well.
Exactly. Money that they didn't have to spend. I mean, they need money. That's the point, right? So they're spending money on an advisor and they're actually going backwards. So it's not a good situation to be in. one of the innovations that we thought that this new legislation provided was the ability to advertise these offers. So, and this is a pretty unique feature. It's probably a more liberal advertising environment than even listed securities have. So provided, obviously, it's not misleading, you can advertise on any medium, provided you include a short risk warning. Always consider the offer document and general CSF risk warning before investing. We have toyed with the idea of getting companies to kind of get a henna tattoo or something on their arm just with the risk warning so they remember. Because if you don't, there are some significant penalties. I don't know that anyone's had to pay these yet, but ASIC's, kind of the grace period's gone, right? So like you need to put this warning on all of the ads that are out there. But what this does is it allows a company to get out there with a short video and some high-level information about their business and see who is interested in investing. And that's a pretty low threshold for a company to get out there and start marketing the offer. But at the same time, we kick off our gatekeeper process. So that means that we're chatting with the company, we're making sure that they've got a pathway to meeting all of the eligibility requirements, and producing the offer document and all of the things that they need to do at the point that they're making the offer. Now, great, if companies come to us before the expression of interest campaign opens and they've got all this stuff ready, amazing. But if not, like that's how our process is built, that they, prepare and get ready and accelerate into this demand, which most companies prefer because it means that they can get out there, market their offer, and then they can kind of reconcile this preparation because they know that there's interested investors, there's a deal that they can do. So that's really, how the process works. Now, there's a few natural filters. The first is that if there's no interest, there's no obligation for a company to proceed. It's obviously unfortunate, but like the company hasn't gone to like all of this effort to produce the document and all of this and releasing all of this information to the market when, no one's buying, right? So that's probably one filter. Another filter is they're public offers. So we often get, people writing into us and saying, oh, this company you got on the platform right now, it's a couple of things that, you might need to know. I say often, it's happened from time to time, but it's been really useful. And this is all before the offer even opens. Then once the offer opens, I've got to remind everyone that it's a regulated disclosure document. So this is the first time that these offers have been produced to the retail standard, that you can't include prospective financial information without a reasonable basis. Now, there's lots of IMs that are shopped around to wholesale investors that, 5-year forecasts and all sorts of things that are put in there. These aren't reviewed by ASIC. So, it's really on the investor to kind of test the reasonableness of these things. So producing a regulated disclosure document to a retail standard, it's a cut down version of a prospectus. It's, it's a pretty sophisticated way to raise capital. And I'm impressed with the companies that have been able to, make these offers because it's, it is challenging, but achievable. But then once the offer is open, this is probably one of the most unique features of our regime is there's actually a regulated discussion forum live while the offer is open. So people can ask questions about the offer, ask questions about the intermediary, anything that kind of piques their interest about it, like in real time, ask questions and the company there. And it's public. It's public while the offer is live. And then the other, final point I'd mention is there's a 5-day cooling off right. So, people have seen these offers, hit maximum targets pretty quickly and kind of, say that people can kind of get swept up in the hype or the fear of missing out. But that's why the government put that 5-day cooling off right in place. So, they were aware that, being on social media and things can kind of, get away from people or people making decisions out of emotion, more emotion rather than rationality. That 5-day cooling off right is there. So if people change their mind, they've got 5 business days to do it. And, and some do. So, it's not as though it's a difficult thing to do. It's actually quite easy. It's a few mouse clicks and you can change your mind and back out. All in all, what many wholesale and sophisticated investors who have looked at these types of opportunities for decades, in some cases, they've said, what a revelation crowdfunding has been, because it's starting to shine a light on this part of the market. Yes, it's opening up to a broader universe of investors, but at least there is some, standardization now of the way that these opportunities are presented, and an active regulator that has some recourse. So although ASIC doesn't review these documents before they're published, that's the role of Birchal as the intermediary. They do have stop order powers. So if people are not happy with the way that an offer is presented, and they've raised it with the intermediary, or they're not happy with the response they get, they can go to ASIC, and ASIC, if they're not happy, they can pull an offer. So there's a lot of regulation.
You're saying ASIC
around.
would have to act pretty quickly, because some of these offers start and finish really
if it happens
quickly.
in an hour, they're sitting there, the halfway mark, half an hour in, they're stopping it.
Well, an offer's
An hour
not
and 5 days.
Yeah.
Yeah.
Plus 5 days, because an offer is not technically complete until the cooling off rights expire. So, like, even with our offer, we hit our maximum target in an hour.
But then you got the 5-day cooling off period.
That's
afterwards.
right. So it's not, you're at risk for 5 days.
So
Can
you're
I
basically
just add,
saying,
just before you get to the next
sorry,
question, Hendo, can I add on that, which I think is the best thing about crowdfunding, which is in the way it used to be done, because all of this stuff happened behind closed doors. No one knew how to do it. Like people who start breweries don't know how to raise money. And I didn't know how to raise money. I had to make it up. I didn't even know you couldn't advertise investment raise. I didn't know what a valuation was. The only reason I knew what a valuation was from basically from Shark Tank and from looking at Brewdog's crowdfunding. And I think a big part of the reason why a lot of people are doing it now is because people know how to do it. You don't have to somehow just make up a way of raising money. The path is there. If you think you've got a good offer, the process is there. It's very public. You know what a valuation is. You know what other people's numbers look like. You learn so much from looking at this data because it's public, very much in the same way as the ASX works. All the company updates, all the annual reports, all the financials, the market cap, the stock price, it's all live. So you learn from that because it's public. And this is like making all of this process that used to be hidden behind closed doors in consultants' offices public. And I think that is probably the biggest and the best, most important change, because you learn about the businesses and you learn about the process of raising money.
That's interesting. So just to sort of recap on that sort of due diligence. So provided you a business looking to crowdfund puts their money down to you and writes I would say compliant offer document, that be a fair thing to say? That they can list. There's no additional due diligence that you do as the platform, or you just like we're the platform. No.
We're very active in it's Dan and others can attest to. We focus our due diligence exercise. Look, there's a bunch of things that we have to just do under the Act. Very prescriptive requirements for doing background checks and good fame and character checks. So all the directors and senior managers, we have to do background checks, ASIC searches on them. They've got, any insolvencies or bankruptcies, all of these things we have to do. We also do, some desktop research, and good fame and character is something that is not defined under the Act, but you kind of have, a few, I suppose, pointers of things that we need to look for. So that's on all of the directors and senior managers. With the offer document, ASIC has a template offer document, and there are some minimum content requirements under the Act. Like, they all need to, include a minimum level of information. We have advanced that template a bit with some additional guidance that we've picked up in practice that we share with companies, and companies work on that document. They'll send it to us, usually in a Word version, and we'll give some high-level comments just to make sure that they're on the right track. Then we like to look at the design version, because the requirement for these documents, over and above meeting the minimum content requirements, it's this notion of it being clear, concise, and effective. And, ASIC has produced, 2 pretty helpful regulatory guides, one for companies that are using the regime, one for the intermediaries that are operating under it. And that's what we use and defer to while we're kind of helping companies through this process. It's the company's document, so we don't write this document. We're publishing the document. So therefore, when we're publishing the document, we're making a statement that yes, this is a compliant document and acceptable for publication. In terms of verifying the veracity of statements in a document, so if someone is just lying, right, like we can't capture that, and nor are we required to as an intermediary. So the explanatory memorandum to the bill, when it was introduced, when they introduced the legislation, the government specifically said that intermediaries are not required to verify the veracity of statements, right? That this was viewed, it's, you know, a kind of an entry point for a lot of these businesses, rather than putting them through a due diligence exercise that would usually, you know, cost lawyers tens of thousands of dollars to go through. All of the directors are taking on the liability for the things that they're saying in the document. So our diligence is focused on the production of this document, and the directors are standing behind this document. So that they are saying,
and they have a legal obligation to stand behind what's in the document.
Indeed, they do. So they all sign declarations at the point of publication, once it's finished, saying that it is true and correct in every particular. So it is their document. So,
okay.
So it's quite extensive due diligence, but we've done it in a way that is scalable and appropriate for the kinds of companies that are using this, because, you know, we needed to build a process that could accommodate a company that was raising a few $100,000 when a company that's raising, you know, $10 million on ASX in an IPO would spend that on lawyers.
Yeah, okay. And so would it be fair to say that currently businesses that are looking to go through equity crowdfunding, they come to you? Do you scour the market and see if there's any, you know, approach businesses and say, hey, you should list with us?
Yeah, we do a little bit of outreach. We certainly did a lot in the early days. Honestly, the last couple of years, it's mainly been like inbound and referral, reverse inquiry, and it's, you know, it's a pretty nice space to be in as a business. What we realized early on was that you know, these being public offers, people that are interested about this, they're more inclined to speak to someone like Dan, who's been through this a few times before speaking to us.
Yeah.
So we find we're having an initial call with someone and they're like, I already know about this. You know, I spoke to Dan, I spoke to the guys from Zero Co, and, you know, whatever. They, you know, they're doing their due diligence before they speak to us. So we, you know, that's good. It keeps us on our toes. It means that we're, you know, always trying to, you know, provide a good service for our clients.
Word of mouth would play a massive part in all of that as well.
Yeah, absolutely. But look, increasingly, yes, you know, we are going to be, you know, looking for, you know, looking for other opportunities, more outbound. But at the moment, it's really, yeah, it's been mainly inbound, which is great.
On that topic, I had a meeting this morning with a local liquor company, not beer, about equity crowdfunding, and my advice was to go with Birchal, as it always is.
Thanks so much.
That's, I mean, this happens all the time.
And I apologize. I mean, I can't do much to stop it, right? Like, people are just going to reach out to you. So I'm sorry.
As you know, I've been an advocate for a long time. I'm keen. I think it's great.
What's been the most successful brewery crowdfunding, equity crowdfunding you've done?
I think it's still Black Ops. So their $2.2 million raise earlier this year, I think, is still the biggest. Wasn't it?
Oh, so Akasha or Bridge Road didn't beat that, did they?
No.
He's still top dog.
I'm interested in the second part of your question, though, Hendo.
And that on top of their $400,000 raise back in 2019, it's 2.6 mil.
2.6 total, yeah. What's been the least successful brewery?
Here comes the bad cop, or the bald cop, as
I think I think I've sent you this data, Steve.
Oh, can I sort this? Oh, it's sortable. There's a table, and I can sort it. Oh, wait, here we go. Sort 9-1. Here we go.
Is
Oh
this-
yeah, 2.2 million Black Ops. Drink West 2 million.
This spreadsheet you
one.
sent us, Matt, is this a publicly available thing or?
Only
Not really.
the special friend.
Only
Okay.
the special friends.
That's really cool.
Dainton Brewery, $250,000. That's the one that's raised the least amount of money.
But wasn't
Yeah,
that their,
so
that was
that
their
was-
target, wasn't it?
Yeah,
That was max. Yeah.
that was their max target, and it was pretty early on. You know, back in the days when that was a lot of money in crowdfunding.
Started 2019. Yeah.
And
That's
I
interesting.
raised that in 3 days. So
What about if you
Yeah.
look at Hendo, the lowest percentage of max target reach? That would probably tell you the least.
Oh,
successful, I
which
suppose.
fucking column is that?
Yeah, I don't know if that one's in
I
there.
haven't got that.
Parcel, company type, revenue, EBITDA. No, it's not even in there. What was the question again? How
Least
many?
success
The percentage of the max.
percentage of max. Yeah, that would tell you that would tell you the success of the campaign, wouldn't it?
Okay.
Well, not necessarily. Look, because I mean, not every platform's like us, and not every company takes our guidance. Like we go through that EOI process to give a company some indication as to how much demand is out there for their offer.
Right.
And it's based on what we've seen convert, we've got a bit of an algorithm that adjusts that demand and gives companies a ballpark range as to what they can expect to raise. And we use that data to guide them as to what their minimum target and their maximum target should be. And we think best practice is to hit your maximum target. Set your maximum target at a level that you've got a chance of hitting. But not every company is like that. Not every platform is like that. Some people, for whatever reason, in the early days, campaigns were opening, and the maximum that can be raised under crowdfunding in 12 months is $5 million. So they just set their max at $5 million, and then open their offers for 2 or 3 months and just kind of keep them open and hope that things would happen. I think what we found now is that it's like all capital raising. Like momentum is key, and shorter campaigns are good. You need enough time to make sure your opportunity gets in front of lots of people, but you want to do it quickly, and you want to inspire people to act.
Yeah, this is interesting. It's like now that I've got these sorting things, the longest days open one was West Wind's Gin at 76 days, followed by Endeavour Brewing at 75 days.
That was the first one, wasn't it, Endeavour?
Yeah. I think so.
That was 2019, that was? Yeah, near two.
It was one of the first.
West Wind's
Dan, I
Gin
think
was
you were-
2018. So
Well, we
you
were the
remember,
first to
Dan,
close,
you were
but they were the
you
first to open.
close. Yeah, they were the first to open.
Yeah.
I still see a good few companies putting a fairly wide min and max. So I can't remember what Bridge Road was, but I remember that being quite wide. What sort of comments do you have on that? Was that within what their guided range from the EOI phase was, or was that something that like you said, they kind of went rogue and they just did it themselves?
No, look, I mean, without talking specifics, I'll kind of explain a little bit behind the minimum and maximum targets. What you need to look to is section 3 of the offer document, the use of funds. So companies will usually specify what they're going to do if they raise the minimum, and then what they'll do if they raise the maximum. So our view is, certainly for a company that's generating free cash, or it's already kind of operating and profitable, you want to set your minimum target as low as possible, but giving yourself enough to at least execute some meaningful plans. The reality is once you get past the minimum target, it's academic. No one really thinks about the minimum target anymore. It's all about the maximum. And that's why we think that's the objective. That's the number you need to focus on is the maximum target. So I think in the early days, yes, people were saying, a low minimum target and a high maximum target, probably looked a little bit, loose. But that's not really the prevailing wisdom now. I think it's more that, you articulate what you can do if you only raise the minimum target, but really focus on hitting your maximum target, and that should be the full extent of your plans. I think that's that's the advice that we give most companies. And look, the reason for that is as I said, momentum. I I'm not sure. Do you guys do on-street auctions in Queensland? I mean,
Yeah.
we're doing.
Yeah, for
Yeah.
houses and stuff.
Yeah.
Yeah.
Do you see the bidding activity increase when the agent comes out and says, "Okay, we're on the market," and then everyone
Yeah.
starts bidding?
Yeah.
It's a similar thing. Like if the deal's away, then people are interested. They're like, "Okay, we're on here."
Yeah, that's a good way to look at it. Yeah.
So,
Yeah, that makes sense. And do you have people in your business that sort of specialize in breweries, or?
I mean, look, breweries have been a really important part of our business from day one. So, we're a team of beer lovers. So, yeah, I mean, in a way, we're all kind of beer specialists. We've been speaking at beer events and involved in the industry over many years, been members of the IBA over many years and spoken at a few events. So, yeah,
I saw you
we
chat
love
at
the brewing industry.
Beer Deluxe a few years ago, I think.
Yep.
Good beer week.
Yep.
And I had a few beers. It was good.
Yeah. Yep.
Have a look at this. What this question here? Okay, the state of crowdfunding report. What are the highlights? Congratulations on the success and results.
Wait, that was my first question, Hendo.
Was that your question?
Yeah, that was my question. That's my first
It doesn't
question.
say
Taking it off.
Dan question.
Well, because this is your format that we're working to, but I had that as my question.
Would you
put
like
all
to
your
ask the
questions-
question then, Dan?
But we haven't even asked your last question.
Oh, what's the last question?
The one
Oh,
you
do you work?
missed.
Oh, that's the way. Do you work with the Sorry, I've skipped a line. I'm on the land here now, so
And I think
that's the reason why.
Sean's got another beer as well, I think.
So do you
spend
do you work with the companies on their valuations? And how do you help them come to a number around what the value of the company is worth?
Yep. It's a great question. We do.
Lucky you asked it.
We don't see it's we don't set the valuation though. So in contrast to an investment bank that might underwrite a deal and then therefore price the offer, we don't do that. And we don't tell the companies what their valuation should be, but we like to give them guidance or direct them as to how they should be thinking about this. And it's pretty complex. It's not just comparable transactions and what you think you're worth. It's also thinking about the future and what your capital strategy is going to be 2 years out, 3 years out, and what the potential return is then for investors. A really simple thought exercise we get companies to go through is often they come in and really big plans, super ambitious. I want to raise $3 million, and thinking about, as they should, founders thinking about dilution, like how much is raising that much capital going to dilute me and the other shareholders. But then it doesn't. We run the EOI process, and the data just doesn't support a $3 million raise. Maybe it supports a $500,000 raise. Thinking about that again, well, okay, can you accommodate a lower valuation then? You might have thought that valuation was supported, but actually if dilution was your concern, maybe it can be a lower valuation and you're kind of giving more upside to the investors that are supporting you in a smaller round. So these are the easy things that we can do, is just kind of, test or challenge the thinking of the founders when they're approaching this valuation question. The most revealing feedback, though, comes from investors that have identified themselves through the EOI process. So this is what we're really encouraging the founders to do while they're running the EOI. You've got people that are expressing interest that usually at that, $10,000 to $50,000 range, like people that are expressing interest at 100,000 and above. The chances of I'm sharing all of the secrets now, so no one's going to express interest at 100,000. But like the probability of converting $100,000 investor, we look at like all of the transactions, and they're usually like pretty low, right? Like all of the magic is in these people that are at that $10,000 to $50,000 range. So companies are usually tailoring how they're engaging with these interested investors through this process. And what you need to do is find a few of these leaders in the crowd. And maybe not on the first call with them, but once you're starting to establish some trust and you can see that they're interested, ask them for advice. That's the key is, involving these people and kind of open sourcing how you're thinking about valuation. Because once we open the offer, you can't do anything about it. If you get the valuation wrong, you've overcooked it.
Yes.
You don't really have any moves. You can't, you can't change the valuation, mid-raise. So it's a really critical phase that companies usually will do once they're able to share the offer document in draft, which is pretty deep into the EOI process. But before they open the offer, we say, okay, you've probably had a few conversations with these, lead type investors. Now just start testing them on valuation. Do they support you on price? Because companies shouldn't be opening offers and then just hoping to see what happens. They should be, knowing that at least I've got my minimum or substantially, a substantial amount of my minimum covered by these investors that I've, confirmed to support my share price and how I'm presenting the offer.
Can I ask a follow-up question to that one with valuations? I get the feeling that people don't care too much about valuations. And I say that it's a little bit contradictory because I know I did say on this podcast a few weeks ago that the Bridge Road one seemed high, and maybe that would have been why they didn't sort of smash it. But even, and I don't think it's necessarily an equity crowdfunding thing. I think it's even like the sentiment of investors generally. I think like if they see a good deal, if they see a good product and a brand and they think this is going to go really well, and the valuation isn't like crazy, then they will invest kind of almost regardless of the valuation. Is that, do you see that as well, or is that just in my head?
Yeah, I mean, there's an element of that. But honestly, I think it's only ever going to get you so far. Like if you do a raise that's just made up of these, shut up and take my money people, who typically invest lower amounts, which is why they're not as price sensitive. Yeah, I mean, you can do a raise, but this is where, I kind of, where we're testing companies about what their future capital needs are going to be, right? Like how often can you do a raise like that? At some point, if you're going to need lumpier checks because you've got a greater capital need, you're going to have to, present an offer that is appealing to larger investors that are more price sensitive, that are really kind of.
So are you saying that larger investors are more price sensitive?
Yes, I mean, I believe so. I think it's self-evident. Yeah, there's probably some that are less so. They're mates that I'd love to have, but the ones I think most that are writing $100,000 checks, they're probably thinking like actually, more critically about the return profile for these. So.
Yeah, the reason I asked that question is I listen to podcasts of investors who are, people who are investing hundreds of millions of dollars in companies, or people who are investing, a couple of $100,000 in startups and tech companies and stuff like that. And their sentiment to me seems to be almost the same as the people that are investing in small crowdfunding rounds, which is like they're just looking for a founder and a product and a brand that looks awesome. And if the founder says the company's worth $100 million, then it's a compelling argument it's almost like it's almost like a confidence thing, like it's if a founder presents that as it's worth that, then that's how it's seen to be valued, because they believe more in the founder and they believe more in the company as a result. But I guess what you're saying is typically the people investing $200 kind of don't care at all, but the people investing $100,000 look at it more with a fine-tooth comb.
Yeah, look, I mean, I wouldn't say that the people who are investing a few $100 don't care at all. Like certainly, in the online discussion forums and so on, like we're seeing how, closely some of these investors are scrutinizing these opportunities, and some of them are not investing, huge amounts. That doesn't mean that they're not taking a sophisticated approach to this. We're seeing a lot of investors investing across multiple deals, and that's probably one of the advantages of crowdfunding is you can, establish a diversified portfolio much more cheaply than you could if you were investing privately, because minimum ticket sizes are usually tens of thousands of dollars for angel investors, not through crowdfunding. But as we've said, the minimum parcel size is usually around $250. So to diversify your portfolio, it can be far more achievable. And I think that means that there's a lot of investors that are applying a pretty sophisticated mindset to looking at these opportunities. But what you've said, Dan, I mean, I agree with you and disagree with you. It's, certainly there are some that are like that, but, not everyone has these, I suppose, these superstar founders that people are just not going to care about valuation and they're just going to support, right? A lot of them are, are businesses that people are, one of the great things about crowdfunding and opening this up as an asset class is that the only people before crowdfunding that have been really active in this space are investors that are looking for these, return the fund, super high growth opportunities.
Right.
And that's, but they'll say to the whole market that they'll look at anything, but they'll pass on almost everything. And there's a lot of really great businesses out there, a lot of great craft breweries that are good businesses that deserve to get funding. And the banks haven't been, haven't been coming to the party. And equity capital, as you know, is a really critical part of the funding mix that, any large and scaling business needs to think about. And here is, infrastructure that can solve that equity piece for companies. Doesn't mean it's going to be the magic bullet. What that means is that, businesses that are going to return maybe 2 or 3 times or 5 times, should be interesting opportunities for investors. And, not all of them are going to have, a founder like you, Dan, the superstar founder, and people don't think about the valuation. They're just going to be good, solid businesses that people love to be involved in. And I'm not going to lose my money. I've got a reasonable return of, getting more out of this than what I put in.
Yeah. I should ask you guys, how much time do you have? Because we've got a fair few questions left, don't we, Endo?
Heck, fucking oath.
Sorry, Sean. Well, I had some questions for Sean. So
we're almost there.
There's actually a solution to that, Dan. Stephen Keegle just said in the Facebook live chat, he said, how can I listen to the live stream at 1.2 speed?
Oh, I don't think that's an option. That doesn't make sense, but good question.
I'm fairly open-ended with time, but I'm just conscious that I'm in someone else's house.
That's all right. Did you want to ask? Apparently, you've got a question, Dan.
Can you? What about you, Matt? How much time do you have? You're just stuck in the office with no one, and it's like 9 o'clock at night.
I got a bit of time. I had some foresight, so usually that's why I'm still at the office. Because if I was home, I've had kids crawling all over me right now. But I am far away from my beer, unfortunately. So here I am.
Smart man.
All right. Well, I've got one more softball question before we go bad cop. So you just released the state of crowdfunding report. Well, the first thing I want to say is congratulations, because you guys do an awesome job. And I've mentioned I had a meeting this morning about crowdfunding. Every time I do, I recommend working with Birchal because you guys are a great team. You're doing a really great job. I mean that very sincerely. And you were very early with crowdfunding. You were present and active and helpful to me and to our industry. And I think the rewards are coming to you now because you've done such a great job. And that's very evident in that report. You guys are absolutely crushing it. And I guess the question is, what are the highlights out of the last financial year of crowdfunding?
Oh, look, I mean, the industry's still growing. So, 82% increase in funding volumes, 86 million raised in the 22 financial year. For me, it's the size of the businesses that are using crowdfunding is increasing, or the stage of business. So growth, business that has more than $1 million in reported revenues. I think we probably need another category now because they're getting, later and later stage in terms of material revenue, but that's increasing. And pre-revenue businesses using crowdfunding, we've seen a significant decline. So, the businesses are generally coming at a, more mature stage. There's a lot of companies that are coming back for follow-on raises and an average uplift in valuation of about 140% when they come for a follow-on raise. Now, that's really good news because, a lot of people thinking, crowdfunding, super risky, but to get a second deal away, a follow-on deal, you've got to come back with a growth story, convince investors a second time. And, like your follow-on raise, Dan, like the change in your business from the first time that you raised to your most recent raise was really tremendous and made us really proud. And it makes our job easy, right? Is to, have great businesses that are, using the capital well and growing their business. And related to that, I think it's also the increase in businesses that are reporting positive earnings at the time that they're making a crowdfunding offer. That increases, it doubled. I think it was like 20% of the businesses are actually generating free cash. And in this current environment where, it's getting harder to raise capital, I'm not sure if you guys have been following the press in the startup world, but, everyone's about, we're no longer talking about growth at all costs. It's, how do you build a profitable business or pathway to profitability? To have 20% of the businesses that are raising through crowdfunding already generating free cash is really great. I think it paints a really healthy picture of the industry and the businesses that are using it. But for craft beer, like food and beverage was the biggest category, the most popular, most invested in category in crowdfunding last year. But over half of it was made up with, beer and alcohol businesses. So, probably an argument for it to have a category of its own. But we've, had it in that food and beverage category because there's been a couple of muted years over the last couple of years. But it's good to see that, that people are coming back and investors are supporting these opportunities.
Nice. Hendo, you want to get on to Sean?
Yeah, let's ask Sean.
That came
I'm
out
not
wrong.
Bad cop. I'm bald cop apparently, according to the chat.
From Lee.
So, hey, Sean, pretty excited to hear about Future Magic starting up and that sort of thing, which is very exciting. As we've spoken before, I mean, starting a brewery is a really challenging proposition. There's many ways to raise the capital to start a brewery. Why did you choose equity crowdfunding?
Well, that was something that we wanted to do kind of from the very beginning. It was an intentional decision, really, because as Matt said before, it gives you access to a bunch of people a bunch of investors that you wouldn't normally. You'd have to go down difficult pathways, or you'd have a really hard time. We just want to give regular people the opportunity, that's got a couple of spare grand, the opportunity to invest in and help build a brewery. That's something that a lot of people have, as an ex-home brewer, a lot of home brewers and a lot of other people have that as a dream one day to start a brewery.
Of course.
And it's so cost prohibitive. We've been saving for years and years and years, and we still need crowdfunding. So we're probably the poorest brewery owners in history.
Yeah, absolutely.
But a platform like this just really helps, and it really helps helps build that community, like a strong community that all owns a slice in it. They end up kind of being your, known by name, come in, be best mates. You really build an actual proper community and help support business. So I see it as a win-win.
Yeah, awesome. Most brewers that I speak to that have aspirations to start a brewery come from home brewing background. Like yourself, like myself, and that sort of thing. Dan just dry hops. He's not even wearing his dry hopping shirt tonight, incidentally.
Oh. No, Mark's not. I don't know where it is, actually. It's a bit of a problem.
What's your brewing background, Sean?
Well, started as a home brewer. Eventually wanted to move into commercial brewing because it really became more a passion. Get some something that you'll probably definitely advocate for, Hendo, is getting some proper education in it. So going through IBD, things like that. So I've been brewing.
Oh, cool. What are you doing at IBD with IBD?
Just the general certificate.
GCB? Yeah, cool.
Yeah. But I'm gonna further that, because I think you can never study enough. If you're not growing, you're going backwards in a way. I think I've also heard you say on a podcast before, the day I don't learn something from being in a brewery is the day I'll stop being a brewer.
Yeah, that's exactly it.
Yeah. So I'm definitely about that personal growth, and this process has taught me a shitload. The amount of growth as a person and as a business that you get through doing this startup process is phenomenal. Yeah, that's my journey is home brewer, commercial brewer, qualifications, and now starting.
Where have you been brewing?
Ballistic.
Okay, how long were you there?
Just under 2 years.
Okay, cool. because when did we have our chat on Zoom? That was around the start of we were on lockdown, I think.
Yeah, it was right. So it was at the end of that year that I started.
Yeah, right. Okay,
Yeah.
awesome. Because that was not your, like, from your personal plan, that was not your original plan. Your original plan when we spoke was you were going to open a gypsy brewing company, and then I gave you the financial reality of what that was like. And you went,
I took what you said to heart, although it did annoy me at the time. I'm happy to admit, and it probably comes as no surprise now. But it's you're dead right. Doing this without any knowledge of how a commercial brewery works is a fool's errand. Absolutely.
But that said, though, have you run a brewery before?
You've got to know how a brewery works to be able to actually run it.
Of course, but have you run a brewery before?
That's part of the learning process.
Yeah. So future
what was the answer to that question? Let's not skim over that bad cop. Jesus.
But this is me during. I'm doing my due diligence on.
Just
on
say
a
no
business.
if you haven't. That's fine. It's totally fine.
I would agree. I think people appreciate the transparency. And that's one of the great things that equity crowdfunding brings, is it brings transparency to a business So you've not run a brewery before, you've not built a brewery before.
Correct, and that's where brewery consultants and help does come in, because there are plenty of people that have run and built breweries before, and anyone that starts a business is a fool to think that they're the smartest person in a room. You should absolutely be asking for help, asking for advice, to even just sanity check yourself, make sure you're doing the right things. Yeah. So no is the answer, Dan and Hendo.
Thank you.
But you've got a space though, don't you? Where's that?
Yeah, that's on Manila Street. So we're stone's throw away. We're neighbors with Black Ops.
Yeah, right.
Yeah.
Great spot.
You're going to need to have a different color dry hopping shirt, because you can't. Red's taken. Looks like grey's taken as well.
I do have a blue flannel, and I was going to wear it, but I thought I'd let Dan be the flannel king.
Oh, the blue Gladfield one or different?
Oh, different one.
Okay.
Aren't they green flannels?
Don't know.
Not there should be.
There's a guy on our team, Connor, who's one of our investors, who's just a flano god. And he's got at least 10 flanos just from this one company. And if we could get him on, and we could just do an episode on flanos, easy.
Yeah, shit. Tell us about your space, man.
So it's around about 630 square meters. 200 of which is brewery, and then the rest is tap room with a mezzanine. Will be a little outside space. It's on so it's Manila Street, and it's a corner of I think it's Waterloo Street. So it's a corner block, and it's got a good couple of car parks, a bit of outdoor space. It's the one space that we all went into and immediately said, this is it.
Yeah. Where's that? And with the space, obviously, and building a brewery, you've got all three layers of government that you've got to deal with. How is your regulatory approval going at the moment, starting with the local council? You've got a DA and everything like that?
Yeah, that's ticking along. So we've had the first lot of sounds negative to say issues, but we've had the first lot
happens all the time.
The first lot of feedback back from them, and pretty much all they're concerned about is making sure that we've got enough car parks. Only the brewery side is accessible. The tap room's already compliant, so we could open that now if we wanted to.
Oh, okay.
So their concerns were noise and air quality and a little bit of parking.
Yes.
We've got probably by far the most parks, apart from maybe the hospitality business next door. We've got the most parks on the street, I would say. It's a ridiculous number. It's like 12 parks.
You're on the other corner to where the hospitality shop is.
Yeah.
Okay, I know the spot.
Yeah, so I don't know what issues they have with parking, but it's council.
Councils always have issues with parking. Fuck them.
But with the noise and air quality, we've had those reports done, and it seems to be compliant. So we're sending that back and hoping that it all goes smoothly. We're getting Russell Steele helping out with the artisan producer license.
Okay, that was going to be my next question. Let's go up to the next layer of government. What sort of state regulation are you going for? So you're going for the artisan producers license.
We're also doing a cafe as well, so that we can open earlier if we need to, because that taproom side's already compliant, so we should be able to get that probably before we get anything else. Maybe except the excise license, which should be coming.
How did it come to be that the taproom was already compliant?
Say again.
So you go into.
I was going to say, how did it come to be that the taproom was already compliant?
It's down to the zoning of the building. It's what you could put into the building given how it's zoned. So it was zoned as, I think it was general industry A, which doesn't allow brewery because it's got to be medium impact. So it's impact accessible, which is, not ideal, but it is what it is.
Sure.
But yeah, so general industry, it allows for a cafe business which is licensed.
Okay.
So yeah, okay. So you could potentially open. I mean, you could open with product that is your branded, but you haven't actually brewed on site.
Yeah.
Yeah. So you'd be mad not to do that, right? Or you.
Yes. There's also the fact that that would also is a cash flow thing too, because you'd also then have to spend money on building that tap room, getting staff, making sure you've got all the product.
Yeah.
So whereas the real goal where you're going to start making proper margins is when you build the brewery.
Why?
What do you mean?
Why are you going to make more when you build the brewery? Because it'd be cheaper for you to make beer.
Why don't you get? Guess what Dan's saying is, why don't you get money in the till now?
Well, it is an option that we're exploring. So that's one of the bits that you said before, Dan, getting any sort of financial advice. You always do it. That's something that we have had a bit of financial advice on, and we're still kind of umming and ahhing about. So if you do have any advice on that, then I'm happy to take it. It sounds like
Not here.
Absolutely no financial advice.
The advice is open.
Literally, the slogan for this show is "This is not financial
This is
advice."
not financial advice.
Yeah.
Sorry, you come to the wrong place.
I think there is something to be said for making, for there's a difference between a cafe and a bar and a brewery. So I think there is something to be said for making sure you are at least making beer on site.
Income.
Or you kind of, put out to the public that you are a brewery.
Yeah.
Mm.
Yeah. You're right. Do you mean in a kind of image aspect? Like you making your own beer kind of thing. Yeah,
it's kind of like what we do here is we make beer, and that's cool. That makes you a brewery. If what you're doing is you sell food and you sell other people's beer, then that's not really a brewery. So I think, I know when we opened at HQ, and a lot of other breweries have done this, which is probably a little bit dodgy, but we didn't open until we did our first brew, and the beer that we were selling on the taps. This was pre-artisanal license, and you weren't actually allowed to do it. But the beer we're selling on the taps was beer we'd contract brewed elsewhere. But at least we were brewing there on site, and we felt like that was kind of good enough. We could get some cash in. It is a brewery. It's a functioning brewery. In 3 weeks, we will have actual beer we've made here. But for the next 3 weeks, we're just selling beer with contract brew. But we are a brewery.
Yeah, sure. And that's kind of similar to what I did today at 7 Mile. Except it was more gypsy brew, so I did the brew. I got a quick run through from Matt there, and was off and running and did the brew. So I guess it still has that little bit of authenticity behind it. So it was actually brewed by the person that is meant to be brewing the beer.
Yeah.
Mm-hmm. And so you said before that you've scrimped and saved for many years to sort of realize this dream and that sort of thing. Let's for a second take the worst case scenario is that you go through this equity crowdfunding round and you don't meet your minimum.
Yep.
Right. What happens then? You got enough money to get the place open without the equity crowdfunding money?
We have the ability to open in some capacity. You know what I mean? So it's looked at in kind of levels, and what we'd do if it wasn't successful is we would then have to go through the sort of regular finance and regular capital raising ways, which is something that we don't want to do because we want to give people the opportunity to help start a brewery and all that. But yeah, so we'd be able to open, but it would be limited. The reason that we've gotten this site, the reason that we've built the brewery that we're wanting to build, it does hinge on these funds. We could have built a smaller brewery with the capital that we've already raised, but we didn't want to do that. We wanted to build a proper brewery. You know what I mean?
It doesn't sound, what you're sort of saying to me doesn't sound compatible with what's on the Birchal synopsis, which is basically you saying that the equity crowdfunding will pay for an expanded tap room, solar panels on the roof.
Yep. How does that?
From what you're describing to me, it sounds like that maybe there's not enough funds to get that up and running without the equity crowdfunding.
No, we as I said before, we would be able to open in some capacity. It would just be very, very limited, and we don't really want to do that.
What would be the limitations, do you think?
Probably look at selling half the tanks from the brewery that we've already ordered. That would be a lot more stringent on cash flow. So there'd be parts that we wouldn't be able to build. There'd be only be a lot less seats in the tap room.
But they're literally that's literally the asset that's going to make you money.
Yeah.
Why would you sell those things?
Full fucking bad cop.
Which is exactly why. Exactly.
No, but you got to have the scrutiny though, Dan. It's
100%.
No, I agree, but
I agree with you.
I feel like don't be too uncomfortable with this.
No, and I'm again I'm sort of asking these questions from a good space and a genuine curiosity, and so basically you're saying that can still get this up and running. It's going to be at a smaller, scaled back way, but you'll still get the brewery up and running. Yeah.
We'll still be able to open in some capacity. Yeah.
Okay.
I think that the idea of starting a business and, there being a very, very real possibility of it not working according to plan is a very real thing.
Oh, well, that's fucking business to start with.
Yeah. So I think it is a good question, but I think it's very normal. It's very normal to not have enough business and even for it could get worse in terms of how much you think it's going to cost to do this thing. It could be a lot more. And that happened to us when we started. Like if you had have asked me that question with HQ Hendo, we thought it would cost us 300 grand. This is quite a while ago.
Mm-hmm.
And we were getting to the end and we were just straight up running out of money. And
absolutely.
We wouldn't have been able to open without, and then we're able to open with the crowdfunding money of $18,000 at the time, which was just a little boost, which was done on Possible, which was what Birchal
rewards
was before equity crowdfunding.
Yep.
And this is what you go through. Like you have so many
absolutely
unknown things. Like the council stuff is very normal. Like you sign up to do a project and you don't have any clue if you can actually complete the project because there are too many variables.
Well, that's in my opinion, I think that's the biggest risk that Sean and Reese face at the moment. Is the council, because the local council, Brisbane City Council, have a really fucking bad habit of dangling the carrot of and I think Sean, I think you're being lulled into a false sense of security as to how close you actually are to your DA. Brisbane City Council are fucked, right? And they will basically dangle the carrot. Yeah, everything's fine, everything's fine, and then they'll pull some random thing out right at the last minute. Right. It's happened at places like Easy Times. I've heard lots of stories of you've got a boiler. It's this many megawatts. You're only allowed to run at a certain number of hours a day. All this dumb shit. And then you've got to go back to the drawing board and back to your town planner and put in new submissions. And that's really costly.
We had a staff
really
member
costly.
limit. Like we could only have 2 staff members work for us.
Yeah.
I mean,
it's mad.
and what,
They're fucking cowboys,
eh? What was your limit on number of patrons we were allowed in HQ on the it was like 4 seats or something stupid.
No, it was 12 square meters.
12 square meters.
Yeah.
Yeah, that's it's unreal.
No limit on patrons though, so we figured that out.
So, oh my god, party time, pre-COVID party time.
Yeah, it was good.
Yeah.
Okay, so just a quick question for you, Matt. Is this the first equity crowdfunding you've done for a brewery that's yet to open?
No, we co-conspirators was yet to
Oh,
open.
of course.
They're
Yes,
very
that's right.
similar.
But they were gypsy brewing though.
Gypsy Brewing and Drink West as well. I don't think had.
Yeah, there you go.
There you go.
And
Yeah,
they
yeah.
were $2
No,
million
no.
bucks.
What about
Absolutely.
Spinifex? Wasn't that a?
That was on another platform.
Oh, we don't talk about Spinifex.
Oh,
Okay, let's
Dan. Not cool, Dan.
Well, the
Hey,
question
you should,
was,
you,
have
you
we
should, you should love
hosted?
me because we broke the record. We broke.
Yeah,
the
well, there
record.
you go.
exactly.
So, being a brewery that's Sean doing a brewery that's equity crowdfunding without having produced any product yet, obviously there's going to be some differences there with regards to the amount of money that you're trying to raise and the amount of equity you're going to have to give away in consideration of that. What's the amount of equity that you're looking at selling in regards to this equity crowdfund? Right.
Yeah, sure. So, taking co-conspirators or Drink West as an example, they gave anywhere from it was around about 7 to around about mid-teens % of the company away for a pretty high price. And we're looking.
Co-conspirators was a very established brand, though, wasn't it? Like
yes, 100%. Yeah, definitely.
But they were selling their product. It was just they were building a brewery to make it.
Yes,
Not really the same thing.
So we're looking at doing around about 10 to 30%.
Wow.
Okay.
Yeah,
that's a lot.
It is.
That's a lot in consideration that, like, I think your last equity crowdfunding, Dan, I think it was like 3-ish% or something.
Yeah, but our first round that we did that we couldn't do via equity crowdfunding because it was illegal. We gave up about 20%.
Yep.
For that 18 grand or whatever it is.
No, our first actual investment round was Simpo and
Sam.
Yes.
Yep.
Yeah,
fuck.
Which brings you to the next part of the question, the valuation.
Yeah, that's what have you valued your business at?
That's as Matt said before, that's something that we're in talks with those high net worth investors to help guide us on it. So it's a fairly liquid, movable thing. There's obviously money that you put in, but then there's risk factors that you take on, potential where it could go, all those things that are speculative.
You should be a politician.
He's a good man. His
ability to not answer the questions is phenomenal.
That is genuinely where we're at. That's genuinely where we're at. We're speaking to those high net worth investors to help us get there. And because we're not there yet, we're not able to. We don't have an answer.
So do you mean high net worth investors who are a part of the EOI or just people you know?
Yes.
All right. Okay. Yeah. Interesting. Okay. And Matt, are you sort of helping with that, or like, because I know when we've talked, it's been like I've sort of said like this is the valuation, and that's it. It's not much of a back and forth. Is this different?
Yeah.
Well, I mean, when we've had conversations about this, Dan, the things that I usually look for in signals from a founder, you have, and it's like we've chatted with our investors. We've got support for the price. What more can I say, right? Like if there are people that are investing material amounts of money into your business that you've kind of gotten to support, like, well, then that's the price, right? And that's what we're trying to achieve here is price discovery. And Sean's exactly right. These are conversations that, at this stage of the offer, you really should be having, one-on-one with people. Like we provide the platform to start these conversations in a digital environment, but founders really need to be kind of, working this out. And this is the luxury that they've got, right? Is ultimately, they can do, Sean can do the offer on the terms, present the offer to the market on the terms that he's willing to accept, but he's taking advice from all of these interested investors and kind of, synthesizing these conversations to arrive at something that hopefully the market will accept.
There's a couple of politicians we got on hand. This is not valuation advice based on those two answers.
Yeah. I think what Matt's trying to do is he's trying to establish a price for the business, and I think that's fair.
Yeah, no, that's
because that's going to have some major ramifications for the future Magic Brewing Company,
absolutely,
right? Because if they value the business wrong, and give away too much equity. And I think I
Yeah.
read somewhere that the amount of equity you're prepared to give up is up to 49%. I think I read somewhere.
No, that's been reevaluated. I'm not sure where that number.
Okay, rightio.
Where that's been from.
But the thing is, if you go give away 49% of your business before you even open the doors, that leaves you no wiggle room in the future.
100%. Yeah.
You know,
30% is a hell of a lot. I mean, like, is your plans for the business to just have a good, solid, functioning brew pub in East Brisbane, or like, do you want to build, like the next Stone and Wood?
Everyone would love to be Stone and Wood. The success those guys have had is ridiculous. We've put expansion in the plans. So yes, we do have things down the track for possible expansion to a second site or something like that.
Right.
But it does depend on initial success.
Yeah. I think Hendo's point's a good one. Then, if you're going to give up,
in an ideal world, we would love to see Future Magic grow and blossom and keep growing. Whether that's through another equity crowdfund raise later down the track, or not, we're not sure yet because those numbers don't exist.
So what are your guess? Like, what's the range for evaluation? What's what are the conversations? Is it like in the hundreds of thousands? Is it in the multiple tens of millions, or what?
Okay, so yeah, ballpark. It's not multiple tens of millions, but it is probably at least one.
Yeah,
so it'd be the 1 to 5. 5 being extreme. One being closer to what's just been put in with no working kind or anything like that.
Yeah,
well, that's kind of basically what you got is the actual build cost and all that sort of thing.
How much is it going to cost you think, to build it and get open, like fully as you want to do it?
What we need from the crowdfund or total?
Total.
Your budget.
It'll probably end up being about 900 to $1 million.
Yeah. Wow. Okay. Interesting. Okay. It's going to be super interesting.
It's a big site.
Yeah.
That sounds pretty standard for that setup in Brisbane and the type
it's a
of
big
equipment
site.
that's been
twice as
spoken
big
about.
as BH3.
Yeah, is it? Okay.
So the kitchen and whatnot as well, I assume, or it's already got that
so
in
it'll be pizza oven. We've got to unfortunately fork out probably about 20 grand to put a grease trap in.
Yeah.
We'll be doing pizzas. We're trying to limit the kitchen side of it, as it instantly becomes a much bigger business if you go adding full commercial kitchens, things like that.
Pizza sounds like a no-brainer.
It's a no-brainer. Beer and pizza go really well together. It can be nice. It can be shared. 2 pizzas to feed a couple of people.
Yeah.
It's a good combo, I think.
I had pizza at Common People in Bangalore. Have you been there yet, Hendo?
No.
Oh, in Bangalore,
is it
Common
good?
People. The pizza there is honestly the best pizza I've had in my life.
Really?
It's unbelievable.
Sounds like
what sort of pizza was it?
It was like a rocket and fennel sausage, some fancy shit. It was minimal. The crust was like sugary and delicious. It was awesome. It's a good brewery.
Amazing.
It's a great spot. Anyway, off track. Any more questions, Hendo?
Oh yeah. So here you are, Sean, doing an equity crowdfund without having brewed a single liter of beer and that sort of thing. There's a lot of your industry peers out there who've had their own hand in their own pocket, who've self-funded, who've gotten themselves up and running and doing a bit of a hard slog there. And was having a chat with someone who will remain nameless over the last couple of weeks, and we were talking about your equity crowdfund, and this person had actually self-funded their brewery to the tune of $1 value, pretty similar to what you've just described. So pretty similar operation and that sort of thing. And when he had heard about sort of the rough talk about the valuation and that sort of thing and the number that was involved in the equity crowdfunding, he basically blurted out the number of the money that he invested and threw his glass on the ground and smashed his glass and was pretty frustrated with that. How do you think you're perceived by your industry peers going through the process of doing an equity crowdfund without having made a liter of beer?
Can you? Sorry, what was the disgusted? I misunderstood what you just said, Hendo. Why was he disgusted at the? What was he disgusted about?
I think that there was a sense of this person felt that they had worked extremely hard
Right.
to self-fund.
Oh, I see.
Scrimping and saving that everybody else has done, which Sean has done himself and that sort of thing, and had to 100% fund it themselves. And I guess
chose to 100% fund it themselves.
Yeah,
correct. Right? Who chose to, fund it 100% fund it themselves and that sort of thing. And perhaps maybe this person doesn't see the value in their own business. Perhaps I don't know, but maybe this person thought that that equity crowdfunding was as an easy path to money. But I think, from our conversation with Matt, that is far from the truth.
I think it's a different pathway to money. We could have chosen to go down the regular finance route. We could have chosen to take longer to do this and save up a lot more money ourselves. But we genuinely did want to build that community. That's why we've done it. We had crowdfunding in our mind from the very beginning. Yes, from a capital raising standpoint, but it was also for those people that are going to become your best customers and advocates. I respect that opinion that person's worked really hard for money. I've worked really hard for the money that I've put in.
Yes, of course.
And it's just a different pathway to getting to the end goal.
There's a real sense of go on, Matt.
This thing about kind of crowdfunding being easy, hopefully we've kind of done a bit to dispel that myth as well.
Yeah, absolutely.
It takes a lot not only to execute a successful crowdfunding campaign, but then also managing this community on an ongoing basis. Some do it really well, others not so well. But it is an effort. So like people that are doing this and really kind of lean into it and manage their community. And, Dan does a great job with, the Alpha team. Like you're out there and it's another job, right? And you get so much more for your business, into your business from having these people as ambassadors and supporters. But to say that crowdfunding is, positive or negative, it's like to say that any investment, is positive or negative. It's just a vehicle for raising capital, an incredibly efficient vehicle that, is far cheaper than the tens of thousands of dollars that people used to spend on, lawyers and separate term sheets and shareholders deeds and, all of these things. It's just a vehicle for raising capital. It's like, saying, someone saying, I don't like, superannuation as an example. I mean, it's probably a bad example, but like it's a fund that aggregates multiple types of investments. Crowdfunding is a vehicle to aggregate multiple types of investors. It just gives you access to a broader audience. So in that regard, I think it's hard to see how it's positive, or negative. It's just it's a vehicle for raising capital.
Yeah. And indeed, and I think once you've raised that capital, I think there's some work effort that needs to go into maintaining those relationships with your investors and nurturing them and that sort of thing. And
definitely,
I know Dan does a bloody brilliant job of that with Alpha Team and that sort of thing. And I think that shows a huge level of respect to the investors in an ongoing way. There's lots of things that Alpha Team do and that sort of thing. What sort of things have you got planned, Sean? What can an investor in Future Magic expect? Do they get a say in how the business is run? What sort of things are going to happen?
Everyone obviously is invited to annual AGMs. Votes. Everyone does have voting rights. Are you talking about investor rewards, or are you talking about what kind of say?
Well, it's a little bit of both, because I think it's like, there's I guess with equity crowdfunding and breweries, I find it really fascinating because part of it, and I think this is to your point, Matt, it's probably some of it's related to the lower dollar value investors who are really in it for the rewards aspect of it.
Yeah,
and then the higher dollar value investors the more professional and sophisticated investors are after a return.
Mm.
You know,
You might
and
you might be surprised, Hendo. I found with our business, like the people, the original investors who weren't part of the crowdfunding, they having sort of like an experience at the tap room that is different to the average customer is a very high value of theirs as well.
Mm.
And the experience of kind of coming to the brewery, being treated like an investor, feeling like they're part of owning a brewery, getting a discount at the tap room. Even people who invest $100,000, it might just be the case that $100,000 for them is not much more than $500 for the person.
Somebody else,
500 in the
Yeah.
crowdfunding. I haven't noticed a big, and sorry to answer your question, but I haven't noticed a big difference between a more sophisticated sort of investor and the crowdfunding investor in this particular industry, because I think a lot of people invest for that reason.
Yeah, right. That's interesting.
That's
very
very
interesting.
interesting as well from feedback that we've gotten from people so far. Yeah,
I think you're probably going to need to find a way to get me a bit more touchy-feely with with your investors, Sean, than just the annual general meeting, mate.
yeah, absolutely. That's something that's in the offer document that again isn't completely worked out. There are a bunch of rewards that are, like these things are becoming, it's almost a combined equity and rewards based crowdfunding type of thing.
I like Dan's point. It's like if I've invested $200, $500, $100,000 and that sort of thing, if I walk into Future Magic Brewery and I'm an investor, I want to be treated like an owner.
100%.
Yeah.
Absolutely, because you're a part owner. So yeah, there's things like taproom discounts. There's another couple of things. One or two things that I'll have to keep up my sleeve before I check if we can actually do them. Yeah,
We can spitball them here amongst friends and we'll figure it out.
You're offering legal advice now, Dan, as well as financial.
100%.
We don't do financial advice.
Yeah.
Legal
We're happy
advice.
to do legal
Dan.
advice.
Yeah. So
Mate,
yeah,
that's
definitely a part of it. Definitely a part of it is making those people feel welcome and making them feel like their investment does mean something. Exactly what that looks like. There's some things that we'll be able to say up front, and there's some things that will wait until the final offer document because we've got to.
Sean, I think what I'd add as well is, like a business like yours at this stage of journey that you're at, like I think Dan would agree, like, the alpha team kind of put together at the time of the first raise, but I imagine, Dan, like this has started to take a life of its own, in the response to the feedback from, people that are engaged and, enjoying things. And I don't think you need all of these answers right now. Like often, you're out there, you're kind of telling your story, you're appealing to people, you're saying, if you want to be involved in this, and sometimes, that's enough. And maybe if you're kind of authentic about it and saying, look, these are some of the things that we're thinking about, but like we'll work it out together, or give them an idea and kind of vote on what they want.
Yeah, sure. There's
some of the feedback that we get from companies is like with rewards. Like rewards are there as a mechanism to kind of help you drive this connection with your brand, but it's like certainly not a requirement. And sometimes companies add rewards because they feel they have to, and they're like, oh, geez, I did the raise and then I had to kind of mail out all these T-shirts to people and whatever, and then finding out that like, some people, it just didn't move the needle or people didn't really care. So like have a think about, using rewards. I think that the broader goal is you're just really trying to drive engagement and build a community. I think that's the goal, right? And I think that's what, Dan's done a great job with the alpha team, and that's what you should aspire to.
Is there any plans,
Matt needs to get credit.
Yeah, I was going to say, is there any plans, Matt, for the platform to help businesses that have gone through equity crowdfunding to help maintain those relationships?
Yeah, absolutely. So funnily enough, we're actually building a stakeholder reporting tool because the reporting requirements for companies are not very onerous. They need to produce an annual report, usually lodge it by 31 October. But we don't think that's enough. We think companies need to be engaging at a much more regular cadence. But it's often a lot of companies don't know how to do this. They haven't seen examples of how people are doing this well. So this is one of the things that our own capital raise was for, is so we can start to build out a lot of these products that will sit in a suite that companies can use to maintain these connections with their investors on an ongoing basis. So, we're hopeful that kind of having these tools will mean that it will be easier for companies to do it. And therefore, these conversations, this flow of information will be far better than it has been in some parts.
That's
Yeah, I know
interesting.
there's been some breweries that haven't been communicating too much. I suppose when things are going well, it's easy to communicate, but if things aren't going well, it's a bit tougher to send an update every quarter. I was just going to say before, Matt deserves the credit for the Alpha team too, because the name Alpha team came from Birchal, and it was you, wasn't it, Matt?
Yes, it was, man.
nice.
Yes.
Awesome.
Which is brilliant. It's the best
That's a
name.
great
Such a
name.
good idea.
So,
Hendo, are you
Yeah.
happy to keep going the way we're going? Because we've got almost as many questions as we've asked.
yeah, no, I can sort of I can structure these in a slightly different and more brisk way, if you like.
Well, I'm just wondering whether, I don't know if it's asking too much, but would it make sense to get Matt back on in a few weeks and grill him with the bad cop questions?
Well, they're not really bad cop questions.
No, I know, but we got
Not
a
that
lot
bad
more.
cop.
What do you guys think?
I,
There's a few more questions. Are you happy to stick around? We've been going for an hour.
You've got
and 40
time
minutes.
for a couple more questions?
Yeah, I've got time for a couple more.
Okay.
I'm probably going to live to regret this, because like you put the fear of God.
Well,
in
I've
me
got
about this
look,
bad
just so you
cop,
know,
man.
I've got the Jack Daniels out now.
shit.
So
Yeah.
fucking
All right, I'm
look
getting
out,
another
eh?
beer as well if you're going to ask more bad cop questions, Hendo.
Okay, so all 12 of our listeners, Matt, have asked about, and the one that was announced today was Dayton, was the equity crowdfunding 2.0, I suppose you'd call it.
Yep.
Now, there's been so with the Dayton 2.0, and a lot of these questions have come through through to me like anonymously. We've never actually done this before, taken anonymous questions, because normally like the 12 listeners are happy to say it was me and shitpost and that sort of thing.
By the way, this is the only time. This is not allowed ever again. This anonymous thing is bullshit.
Yes, that's right. I agree. I 100% agree.
Okay.
It's the only time we're going to allow anonymous questions.
And
just
before you go further, so I'm not going to kind of chicken out on stuff, but it's an offer that is upcoming, and particularly someone that's kind of not here as well to provide additional context. It's going to be pretty hard for me to talk about an offer that I haven't reviewed their offer document yet. Like the ELI open now, so I've kind of just described to you our process. So
that's actually a really good point.
The details of their offer and how they're going to present it.
When you're not the person making the offer.
I don't have this information. All they've done is, if I described earlier, all they've done is gone to the market and said that they're working on their offer document now, certainly, but I haven't seen it, so I'm not in a position to comment on their offer.
Do you know what we should do, Dan? We should get the Dayton crew on.
Who is the Dayton crew? Because I just watched that video and it confused the shit out of me. I looked at their last crowdfunding, like their page there has Dan Dayton and his dad, right? Is his dad the
Kevin? Yeah.
Kev.
And Will, and
they're not even present at all in the video. They're not even mentioned in the video.
No, so Will's there. So Will's been with the business for many years. I think he's Dan's brother-in-law, Kev's son-in-law. So and yeah, he's been. I think he was their general manager now, and he's kind of stepped up and he's running the business now. So that's Will, and
Why
really
would they not
excited
even
to welcome back.
mention the business. I don't know anything about Dayton. I mean, I knew Dan many years ago, but
yeah.
Is it weird they're not even?
He's not in it this time around. He's not in the video or anything.
No, not mentioned at all.
We should get him on. We should get him on. I think, Dan.
Get Will on. He's a lovely guy.
Who's the guy who does the actual presentation on the video? Is that an actor? That guy's way too professional to be like a staff member.
It's Will.
That's Will?
The main guy in the
American
video.
accent. Yeah.
Wow.
Okay.
Are you sure? Wait, let me. That guy looks like a professional actor. Anyway, I got a bit off track.
I've looked at a few iterations.
Do you know when what happens, Matt? When you put silence in, and we respect silence on this podcast, but there's podcast apps you can get that cut the silence out.
Oh, yeah.
No, it's not Will. Is it the guy? The main guy in the video is not that guy.
tech.
By the way, this
This is riveting podcast.
No, it's okay. We cut the silence out. It's fine.
I don't
And you
cut the
muted
songs out.
yourself.
The app cuts
He's
it out.
muted himself now. The silence is definitely getting cut out.
Oh dear.
It doesn't matter if it's an actor.
It's
It's
probably
fine,
because he's
but-
typing and Matt might be a loud typer. Now
But
he's
did you
laughing
think the
at
same
us.
thing, Hendo, when you watched that video? Or am I just?
Yeah, I was thinking, who's in this? And there's no Jan Dayton.
There's
The guy
no
with
any
the
Dayton.
moustache. It's
What
not
is
Will.
Dayton? There's no Dayton.
Who is it? Who is it, Matt?
I don't think he might be an actor. I don't
It's an
know.
actor for sure.
The
Look
guy
how
with the
good he
moustache
is
is
in
not
the
Will. I
video.
don't know who he
The only
is.
brewery that can pull that off is Stomping Ground, who've actually got an actor who's like the founder of the business.
Ask Will. Have him on the show next week.
Or Bolter
good
could
guy.
do it. Stirls from
Have it.
Bolter could do it, but that's
Oh, yeah.
that's
I had
about
a
it.
beer with
Yeah,
Will
yeah.
last night. So.
Okay, all right. I think we should get the Dayton crew on, Dan. I'm
Yeah,
100%.
yeah.
fucking
Sounds good.
keen for that.
Sounds
Because
good.
there's some really good questions here that I really would love to see them answer. And I think to be fair, I think it's appropriate for them to answer it, not the guy who runs the platform.
100%. So which Dayton
Yeah,
are we
yeah,
getting
I'm
on?
not-
Are we
I'm not-
getting Will or
Yeah.
are we getting the actor or some other Dayton?
Can't we get both?
Get the actor. Get the actor.
Right.
Okay. All right. Let's go. I want to ask another Birchal question though.
Yeah.
Okay. So Birchal trade. Right. So one of the key things with equity crowdfunding at the moment is that, and I guess one of the things that the reason why I don't choose to invest using equity crowdfunding is that when you take out that equity crowdfunding, that those shares become very illiquid, which means it's very difficult to buy or sell those shares.
Yep.
Virtual trade apparently is something that you're about to launch, and it promises to provide liquidity to people's shares in companies, allowing them limited trading. How do you determine the price at the point where there's supposed to be a trade happen?
Version 1, it's the company that sets the price. As part of, companies running what's called a low volume market. It's a financial market that doesn't require a markets license. Markets license that's open to retail investors.
Is there any regulation at all? Or
Yeah, there's a lot.
Okay.
A market license open to retail investors is typically a tier 1 markets license. So it's the same kind of license that the ASX has. So as you'd imagine, very expensive to have.
I was going to
and
say, sounds expensive.
Yes, listing rules. But it's not only for the market operator; it's then all the compliance and the marketing rules that all of the participants in the market need to comply with.
You should crowdfund to fund that shit, eh?
What's that? Yeah,
You should crowdfund to
crowdfunding
fund that sort of thing.
might cost a bit more than $5 million, but a low volume market is a market that a financial market you can operate without a license, but you can't facilitate more than 100 transactions and no more than $1.5 million in aggregate value within a 12-month period. And we think that this is a pretty neat way for some companies to provide liquidity to their shareholders. But it requires, there's a few preconditions for a market to work. You need demand for the stock. You need the company to not have a capital need because, if there's demand for the stock and they've got a capital need, they'll take that themselves and issue more shares. So there's a couple of things that need to work. And then also there's a few quirks with the way that crowdfunding legislation works. Proprietary limited companies can have, potentially unlimited number of investors, whereas usually you have to convert to a public structure once you get over 50 shareholders. With crowdfunding, anyone that acquires shares through a crowdfunding offer is not counted for the purpose of that test. But there are some inconsistencies with the way that this low volume market, basically the low volume market legislation was kind of put in place, or the exemption was put in place before proprietary limited companies could have hundreds or thousands of investors. So there's a bit of a tension that exists between these. Because of this, it's been hard for us to find a suitable company to pilot this service with, notwithstanding that we've built it and tested it.
Because it has to be, if only 20% of your companies that are doing crowdfunding are profitable, like 80% of the people are not going to be suitable for something like this, because you want to be, looking at companies that aren't growing quickly and need that money for growth. You want companies that are profitable, they're spitting out money, and they're just happy to kind of let investors trade amongst themselves.
Yeah, that's right. But, it's quite often that, like even with your raise, with our raise, we hit our maximum target very quickly. So we had 600 investors. We had to keep the offer open because we had to wait for the 5 days cooling off rights to expire. But while it's still open, you're accepting applications under review. In case people exercise their cooling off rights, you can slot someone in and make sure that you remain fully subscribed. So during those 5 days, we accepted another 800 applications under review. So in addition to our 600
Whoa,
yeah,
that's a lot.
And over $2.2 million in oversubscription.
And that's when they go to a website that says the round is closed.
Correct.
Holy shit, that's crazy.
Man.
So if they went there and the website was open, do you know the stats on like how much does that conversion drop off? It would drop off a huge amount.
Yeah, well, that's right. Like we don't. The short answer is we don't know.
Yeah.
But like these are people that invested knowing that they weren't guaranteed to get shares, right? They're still kind of putting in their details. And
how much do you think? Just on that, how much do you think you guys could have raised if?
I think it's clear we could have raised the 5. There was, it was $5.2 million of interest that was, put in his application.
How much if 5 wasn't the limit? How much do you think you could have raised?
I'm not sure, Dan. I don't know.
That's amazing.
Yeah, it was. I was pretty humbling.
That's the FOMO factor right there, isn't it?
Yeah.
Well, you've got a community of investors that trust your
platform.
Trust your platform, yeah, and your brand, and yeah.
It's fascinating.
Well, we've got 170,000 members on the platform now, and they're people that love investing in interesting businesses. They're forward-thinking people that that are out there and want to support these businesses. And
and your business is solid too. Like the numbers were solid, the brand solid, the team, everything was like it was a no-brainer kind of offer.
I appreciate that. So look, that's a clear use case when a company hits their maximum target and there's surplus demand. So they've got all the capital that they need. And then if there's more people that want stock and the company's not willing to issue more stock, well, maybe companies could show some of that demand to their existing investors. Maybe you've got an early investor that invested $10,000 in an earlier round. Maybe their stock's worth 50 grand now. And they're like, I'd like to just take 10 off the table and just kind of let the rest of it ride.
Do you mean instantly as that's happening?
So a company could max out their crowdfunded offer and then open a virtual trade facility post the raise, and then
like instantly as it's full, that trade facility opens.
Oh, if that was set up beforehand, but yes, like within a reasonable period of time. How many listeners did you say that you had on the?
Just 12.
12. Just 12.
Okay. All right.
Yeah.
So I'm going to give you guys a bit of an exclusive. We're in the midst of our first confidential closed pilot for virtual trade right now for ourselves. So it's been hard for us to find, a suitable pilot. No one wants to be the guinea pig. So doing our own raise on our own platform, we're piloting virtual trade for ourselves. I'm very pleased to say that we have 25 people that missed out. We couldn't go to everyone. So we went to people that had invested, at a higher amount. But 25 people have submitted buy orders and paid for shares, and we're about to open that up to existing virtual shareholders, so pre-CSF shareholders, to see who would like to, if anyone, sell some
That's
stock.
fascinating.
Amazing. Wow. So how did you get the list of people to be part of this? Are they people who completed the raise after the 3 million?
People that were under review, people that missed out.
Amazing.
So we by invitation, we went to about 60 of them and said, look, thanks for your support. We gave them a bit of an update. We announced that it's the first time that we're piloting this service. And then they, as I said, 25 of them have taken up the opportunity.
Can you tell us the valuation?
No, don't ask that, Dan.
Same.
It's the same valuation as, it's the same valuation. Obviously on post money, but it's $1 share price, right? So, but it's the same valuation as the offer.
Why would only 25 want to invest if you had 600 that wanted to invest on the day?
because we didn't go to all of them, and
Oh, I see,
we
yeah.
can't,
Just
and
one
also
high net
we
worth.
can't do, we're limited. We can't do more than 100 transactions, and
Yeah.
also any of the people that we add, they won't be CSF shareholders, so they'll count toward. We're still a proprietary limited company, so we don't want to have to convert to
I
a
see.
public structure.
Yeah.
So there are a few limitations we've got to work with. But there's going to be a few learnings through this. But we're really excited by this, right? Because, you know, if I talk about Dan's business, if I talk about, you know, Bridge Road and some of the others, you know, a lot of these breweries are saying, like, you know, we want to remain independent. And what does that look like, right? For shareholders that are involved in these businesses, at some point they're going to want to get out. I think the exciting thing for us is to reimagine what does, like, investing in these, you know, essentially private companies or quasi-public companies, what does that look like? And this is probably the first step of these, you know, new products and services that we want to provide, not only to companies, but to investors. So, you know, to give people the confidence that, you know, I can get in and get out if I need to, and knowing that, you know, companies, if they're just consistently delivering and growing their business, then, you know, they'll be able to have demand for their stock. So I imagine that, you know, a company might release quarterly results, annual results, and, hey, you know, we're okay. We're not raising capital at the moment, but is anyone interested in buying stock? So then, you know, people kind of say, yeah, you know, like, well done, guys. Yeah, I'd love to, like, increase my position or get involved in the business. If the company's not raising capital, why shouldn't they be showing that demand to investors that want to take some money off the table?
So with those 25, I'm guessing the people who are selling, I assume, are people who invested earlier on at like a much less valuation, right? Like they invested when the company was nothing.
Yep.
So they probably have a huge amount of equity in comparison to the equity crowdfunding people who missed out. So are you filling up your limited pool of traditional investors with 25 investors at really small amounts? And if so, is that a really bad idea? Because then your pool is full and you can't get people in at a much higher amount.
What do you mean?
Like you're giving up 25 spots on your 50
on a limited cap table. Yeah. I know.
Yeah.
I know. You're 100% right. But we're not the only company that's going to be in this position, and I suppose we're taking one for the team because we really want to offer this service, and someone's got to do it first.
And you didn't want to change to a public unlisted, obviously, otherwise you would have done that.
Yeah, I mean, not yet. Like, we actually went through quite a bit. You know, it was quite an effort to update our constitution. You know, like all companies do, getting ready for a crowdfunding offer, knowing that our document would end up being a de facto precedent, whether we like it or not. You know, people will look at what we've done with our governance arrangements. And so to brief to our lawyers, and we use Ashurst, my old law firm, we just said to them, guys, we want a best practice document. You know, investor on one side, founders on the other. We want it in the middle. It's got to be fair and balanced. And that's what we went with. So there's a lot of time and effort in, you know, putting that in place, that I think for then us to kind of convert to a public structure and then revisit that work so soon, we're kind of a bit reluctant to do that.
Well, that's interesting. It's you're going through the same thing that's what I love this so much. It's such a cool idea because you're going through the same thing that every founder is going to go through. Because I've been through this. Like when we started talking about it, when we started talking about crowdfunding initially, it was like, we can't do it unless you change the public unlisted. And it was like, well, that's too hard. And as soon as it was PTY Ltd, it's like, we'll do it. But the share trading thing, I hadn't thought to do it that way, but I do think that's a big risk, especially if, I'm guessing, because they invested in a lower valuation at the start, you're probably not losing any of the original investors, right? They're just giving up a portion of their shares. Yeah. So
look, I don't know. I don't know who's going to sell yet. There's only a handful. Like, we didn't have that many shareholders at the start. And I mean,
but it's almost certain that like they're not going to sell the whole lot.
Take
of shares,
some money off the table.
Yeah.
Some might take some money off the table.
Right, but you've only got maximum 50 shareholders, and you're not losing any by doing this. You're adding 25, and so eventually you run out of slots, and you kind of can't add any more in.
Yeah, but this is something that, I mean, this is where there's a bit of a contradiction with the way that the laws, like the situation we find ourselves in, you know, with the laws, right? Is that on the one hand, you can do a crowdfunding offer as a proprietary limited company, end up with hundreds, thousands of investors.
Yeah.
On the other, the government's previously said, this low volume markets regime is there and kind of available. They don't really work together. So this is something that we're in discussion with ASIC about, and we want to find a way to make this, to make this work, whether it's this iteration or whether it's something later. But the plan is to run a few of these pilots, get some learnings, prove that it works, no one died. Let's figure out how we can, build out this infrastructure, because I think it'll improve confidence in the regime. It'll answer this
100%.
question about, what's next.
It's needed, and it's a no-brainer for the government to allow private companies to allow their shareholders to trade stock.
Yeah. And then I think when a company like yours, Dan, or, like Ben from, Bridge Road is out there and will say unequivocally, I am not selling to a major, at the risk of disenfranchising some people that kind of hold that out as a dream exit for, getting involved in a brewery, is maybe they're going to be acquired by someone and I get a big payday. A founder is out there and just being really upfront and transparent with the community and saying, that's not us, right? We're going to stay independent and we're going to keep running this business and growing it as big as we can. It's incumbent on us as a platform to build out services like this, so people can have the freedom to say that and not be disadvantaged by people saying, well, I'm not going to invest in, because there's no pathway for me to ever get my money out. I don't agree with that necessarily, but it's a harder position to sustain when we've got services like the ones that we're working on.
On the flip side, it's the perfect way for a brewery that wants to maintain its independence to actually stay independent.
Yeah,
100%.
It's fucking amazing.
And the other thing is, if you think about who invests in these breweries, a huge percentage, even ours, which is it's a reasonable size brand, a huge chunk are people that come into the tap room, regular sort of locals. And so if you think back when we did our very first rewards-based one, we're talking 2015, it's 7 years ago. If you invested in 2015 because you were living around the corner from HQ and thought it'd be good to, support the local brewery, your whole life situation's changed. You might still be a big fan of Black Ops, but it might make sense for you to, sell your shares to someone who's moved into the area and is now the current kind of Black Ops super fan. And that might work, but that seems like a perfectly reasonable thing to do. Yeah.
And this is the thing, it's just rather than asking people to do this themselves and, the average person, how do they even go about doing that? Okay, I'm going to sell my parcel of shares to someone else. It really should be the companies, because the company's got the perfect information on the business and doing it in an organized way. It's just, it just supports confidence, having confidence in this and encouraging more people to do it.
So how, do you think it's any closer? Because we've been talking about this for quite a long time. Do you think it's any closer?
Look, there are a few companies that we've been chatting with that are already public that would like to use this. I think it was important for us to just kind of hold off and do this ourselves first and, test the tech. And, we've actually learned quite a bit, even in terms of, because there is an element of making this up as well. These low volume markets, they've been around for a long time. They're really rudimentary. What we're doing is quite different. So, we're out there kind of, building, borrowing themes and concepts from listed land and, transposing it to what we're doing here. But this is why we raised the capital, is so we can, work on, these products and services and really that's just what we mean when we talk about this, ecosystem of support. So.
Very
fascinating. I can honestly say, Matt, that you have enlightened me.
Oh,
are you coming over to the dark side, mate?
No, I'm not going to invest in a brewery, get fucked their shit businesses. But in the broader sense, crowdfunding and that sort of thing, there's a lot for me to take away there, mate. And wow, that's really interesting. I feel more informed for this conversation. It's awesome.
Yeah, look, I mean, we're we want to drive entrepreneurialism in this country, and it's not by people just kind of toiling away themselves running businesses and being reliant on banks, solely for their funding, right? So we're trying to unlock, the power of communities and people kind of supporting a founder, finding someone like Sean and saying, you've got an idea, I want to support you. And I understand, like at the start of an industry like this, when all you're doing is, the only thing you can do or can conceive of is putting money in, but not getting money out, right? But that's why we're working on, the what's next and all of these other things, because we hope that in the future, rather than people building wealth through, property and, blue chip stocks and all of these things, that we're actually a nation of builders, people building businesses and supporting each other, and actually,
Making stuff.
people making stuff, but also making money out of supporting each other's, ventures. Like that, I mean, that's the utopia that we talk about at our, in our business. And I think we're heading there.
Absolutely.
Brilliant.
Yeah.
That's a good note to finish on, isn't it, Hendo?
Yeah, absolutely. Yeah, that's amazing. Matt, thank you so much for your time this evening. That was a very, very, very enlightening chat, and I have come out of this conversation with a much different perspective of what I went in. Sean, mate, I wish you the best of luck with your crowdfund, with the building the brewery. Whether it goes well or whether it doesn't, whatever, you already know you're in for like the hard work and that sort of thing. And it sounds like you put in a lot of hard work just to get to this point. And I sincerely wish you the best of luck with it and that sort of thing.
Thanks, guys. Really appreciate that.
100%.
Come for a beer.
Yeah, Matt, love your work. You know that. I've always loved your work. You guys do a great job. You're so generous with your information on this and your time. And
Thanks
Sean,
so
if you've got any questions, we didn't mention the collab with Black Ops, but
no, we didn't
mention that.
That is something that is in the works.
Yeah.
Yeah.
And then I got questions.
And then I got called bald cop, got turned good cop.
Yes, exactly.
Get fucked. Awesome, guys. Thanks very much for the chat this evening.
Awesome.
And if you're listening and this is the first episode you've listened to and that sort of thing, head to facebook.com/groups/Boss and the Brewer. Come and join the conversation and shit post. You can do Matt Vitale memes.
Oh, okay. Yeah, we can do that.
Why not? And that's what we do here. So thanks very much for joining us tonight, and catch you guys next week.
Thanks, Jen.
Cheers, legends.
Bye.
Thanks.